Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the U.S. Mid-Session Brief. Today, we're going to use a futures, Forex, and stock market scan. We're going to look all over the markets, crypto especially. We're going to start off with Ethereum. I think that Ethereum's in an interesting position potentially for a breakout. So we're going to be sort of interested to see exactly what happens in the coming hours, especially with a big-time news event that came out of the crypto sphere. And we're in an interesting situation right now. Are we bearish? Are we bullish? I sort of set the table for a nice bearish breakout in today's trade idea for Ethereum. We also had a pretty good idea that these markets were at a make and break point yesterday, especially with Bitcoin and Ethereum. A lot's going on, though, and a lot's changing right now. So we are seeing a rally. We're seeing some money pile into stocks, especially the tech sector, big tech, giving back some gains, pairing some gains right now, but still in a pretty bullish position as we roll into the mid-session. So it's good to see everybody back in the room. Hi, Shane. A hat? Yeah, I'm rocking the baseball hat today, Tina. Figured I'd try something different. Funny, you go with a real nice cashmere sweater with a baseball hat, but hey, why not? It's Christmas, right? We're in the holiday season. Still taking things very seriously, though. Figured I'd mix in a baseball hat at least once a year. That's for sure. Bobby Bob, good to see you. Welcome. Tuku, always a pleasure. JC, hey, Shane. Hey, JC, how's it going? Lita, good to see you. Lita, Andrea, always a pleasure, Andrea. A lot of long-time viewers here, so I'm definitely happy that you tuned in today. We've got a lot to go over. We got a pretty good analysis coming our way. I think it's going to be pretty hard-hitting because there is a development that, against all odds, I think is going to happen. I believe it's coming here relatively soon, and I've been talking about it a lot, and that's the strikes on Venezuela. To me, I think it's imminent. I think it's coming. We've seen some telltale signs today. If you watch all the media outlets out there, there's a few things that really starting to say that, yeah, there's going to be a strike on Venezuela. Now, if I knew exactly when, we would make a fortune. I don't know exactly when, so I'm not going to say, okay, it's coming right now today because I don't know that. But it feels to me like it's coming. And I sort of learned over the years to trust my gut. You trust your gut after a while. After being right a lot, wrong a lot, you typically start trusting your intuition, and you definitely want to trust yourself. That would be the number one thing that I would say as a trader you have to do. After a while, after you get some experience, you get some success in these markets, you've got to be able to trust yourself. If you trust yourself, you'll find that things are going to be okay. They're going to be okay. So good to see you, Callie. Good to see you. Good to see you too. All right, guys, let's go ahead and get on with it. I would say that probably the best place to begin is with our trade update. Let's go ahead with our trade of the day. Trade of the day is going to be Ethereum, and SEC cuts crypto red tape. And is there an Ethereum USD breakout? Well, I mean, it's to the top side right this minute. I sort of outlined these technicals yesterday, and it's strange. I mean, I'm almost starting to feel like maybe there's folks in the administration that are actually protecting some of these markets. Now, crypto has definitely been one of those markets that you say, hey, what can we say about crypto that hasn't already been said? Nothing. I can't give you a bullish thing. I can't give you a bearish thing. All we can really do now is say what is happening. We're seeing some significant selling. We know the long-term uptrend is still very much intact, but these key levels that we pointed out yesterday, they were absolutely huge for Ether and Bitcoin. Ethereum right there, 62% on the monthly. That's a big-time zone, 27.55-ish. When you look at something like that, you have to say, yeah, that's a legit level. I mean, that's a big-time zone because it did hold up as downside support. Now, right now, we're printing about 3,000. I don't believe this market is out of the neck of the woods just yet. The reason for today's bump is going to be a fundamental one. I'm going to cover that in just a second. But if you get back to our trade idea, essentially what we've done is we've pointed out last month's low. I did this yesterday. Last month's low is going to be the key for this market. So if you're interested in potentially taking a trade, that would be a breakout trade that I'm looking very hard at for Ethereum. Now, whether it comes our way or it doesn't come our way, I don't necessarily know. I don't think anybody does. But we do know one thing. The market will probably fall apart underneath November. And I'm not even going to qualify it. I'm not going to say probably. The market will fall apart if we trade under November's low. So the biggest thing I'm watching right now in Ether is going to be November's low. And the idea would be relatively simple on this trade. This is a trade. This type of trade is a breakout for me. It's what I call a key level breakout. I execute this type of trade an awful lot in the gold market, gold futures. We find gold futures washouts all over the place. Crude oil is another good one. I actually used an example of a gold trade back in the the Business Insider articles that came out last spring, one of which was centered around, Shane, how do you trade gold? And I talk about key levels and breakouts in that article. If you didn't see it, it was over on Business Insider, but don't worry about it. I believe they have it behind a paywall now, so I'm not going to ask you to go subscribe to their service to see the article. I'm going to give you the quick and dirty right now. Essentially, when you see something that is a high, not necessarily a high liquidity asset like a Euro USD, those are a little bit different because there's so much volume at each price point. But when you see something like an Ethereum or a gold or a crude oil or something that a silver, oh God, silver. But when you take a look at when these things break beneath a key level, previous month's high, previous month's low, all right? Previous week's high, previous week's low, previous day's high, previous day's low. A monthly low is a big deal. It's almost like a yearly low. Monthly lows are beautiful. You can see right there, you have a washout potentially there. That's what I'm looking at. And the basic idea is this: sell there, looking to grab a run to the downside. And the beauty of this is our profit target is just right up in there. Very, very modest. It's a pretty good one, though. So if we trade beneath last month's low, you're going to have an opportunity to sell this thing and be aggressive. That's what I would call a breakout play. And on a breakout play, we're looking for immediate positive price action. If the sellers aren't there to support us, we are gone. And that's all there is to it. That's all there is to it. So I would be very, very interested to see what happens with Ethereum. The reason for the rally today, I mean, full disclosure, this was all fundamental. I mean, take a look at this. Was from, I don't know, a crypto briefing. There's a million of these crypto news outlets, but this is it. U.S. SEC expects to roll out innovation exemption for crypto in January. What is an innovation exemption? It does not matter what it is. It does not matter. All we need to know is this: the administration is deregulating the industry. And through deregulation is going to come speculation, and from speculation is going to come a rise in prices. Now, it's not going to be asset-wide, at least not forever, but the bump we're seeing today is pretty much everything in the DeFi space is getting a kick in the pants. You're seeing Bitcoin's up 6%, Dogecoin's up 7.8%, Ethereum's up 8%, Shiba's up 6.5%. These are key markets that are all moving higher, and they're all getting a pop off of this news. There's two things that drive crypto: regulation and, well, fraud, essentially market meltdowns, anything that threatens blockchain integrity. Those two things really drive valuations. We could also say monetary policy drives it a little bit as well. Theoretically, a dovish dollar is going to send all these cryptos higher because they are risk assets. That type of news right there. Full disclosure, I was holding shorts in my contest, and I got rode right now. I'm getting hit pretty good. I'm going to go ahead and ride it out for the last few days of that TradingView contest. But right now, it's not looking good for those shorts. But if we get beneath Ethereum's last month low, eyes on the prize, and understand what can happen there, that could be a major, major sell-off. So I definitely wanted to start off there. I think that's a fantastic place to really begin any discussion at all about how fundamentals impact the markets. This was a pretty much done deal to open December, in my view. No question about it. 62% compression right around 27.50. We were looking for that. Just all we had to do was just peak a little bit further, knock out November's low, and the break was on to the downside. It did not develop. Maybe later this month it will. I don't know. Maybe later this week it will. Personally, I think that was a heck of a stand by the bidders. It took a lot of bidding to defend that level, and it happened. Ethereum was the one that I was really interested in. Now, Bitcoin, pretty much what everybody's looking at these days. It's really difficult for me to argue with Fibonacci numbers. After 15 years of doing it and all the time in the markets and all the hundreds of thousands of pricing charts that I've looked at, when it comes to Fibonacci's, they're my go-to. That's what I like to do. If you don't like them, don't worry. It's not a big deal. There's a million different ways to trade out there. You can even invent your own. We're in the age of AI. Head on over to Algo Builder and say, okay, I want to use RSI, moving averages, and Bollinger Bands. Let's build a strategy. You can do it. Now, what I would definitely suggest is this. Understand market structure. If you're not going to learn anything else from these streams or anything else about the markets in general, we can talk about fundamentals all day. I can walk you through all the technical analysis you want. What you have to understand is how to read market structure. Understand how to read it. A flat market versus a trending market. Understand it. Understand that longer time frames are more important than smaller time frames. Just because you're trending on a 1-minute chart does not mean that the market is trending. That's my piece. I'm going to get off my soapbox now. But what we also need to understand is this. Market structure is big. Fibonacci's are key, too. This is the beginning of the rally, essentially. November back in fall of 2022, just an ugly sell-off down there. You're right around 15,000. And it was at that point when we had already rallied up to 60, 69,000, then back down to 15. A lot of people thought it was over. They saw Bitcoin as being a Ponzi scheme. They thought we were going to zero. I don't particularly, wasn't really arguing with them. I said, if 15 didn't hold, I knew we were going much, much, much lower, and it held for whatever reason. That was a 78% wave at the time. I'll show you that some other time, but this one right here is a big one. That's the beginning of your rally from those 15 lows all the way up to your 125 highs. Along the way, what do you have? You have a wave count. You could probably call that maybe a 1, an initial breakout 1, a 2. There's a nice 3, a 4, a 5, and then the question is what comes after 5? Well, typically you reset the cycle. In this case, you got to pull back, and then you probably reset to a fresh 1. That's the way I read it. Clearly now you're on a number 2, no question. 3 months losing, that's a big deal. So when we're looking at this level, all of a sudden, what happened? Well, we bottomed out this month, went right down to 38%, sort of tested this zone heavily last month, and now we've bounced from 84. It's a beautiful thing. If you bought 84s, you're up to 91, and life is good, and you're probably buying crypto toys. That's what I call them. Out buying, in my neck of the woods, you'd be buying snowmobiles and quads and all sorts of different toys. But in town, in the cities, I don't know what you'd buy. Probably some nice dinners, maybe some clothes, pair of sunglasses. That's a big time level. 84, definitely keep an eye on 84. Now, what I meant by the last pullback here was, and we were all over it. We really were. You could see what happened in Bitcoin when we were rotating down around 10. The key levels, I can't stress it enough. 10, that's 10.5, but essentially 10,000 was the name of the game going all the way from December of 2017 all the way through, September of 2020. This was the game, and then you broke. You broke when? You broke after COVID. Why? Because there was a lot more money in the system, and a lot of people bought crypto with that money. No question about it. It's exactly what happened. So from this low in March of 2020, if you went from those panic lows right up to, say, that euphoric high right there, pull back to 62%, then you made another leg higher, right? Okay, extend. Then what happens? Crypto lows, not crypto lows, but panic lows, COVID-19 lows, all the way to those all-time highs. And we're talking about 3,000. A low of 3,000 all the way up to 69,000. That's a 20x payoff. Well, pretty close, 15x. That's a 15x payoff. That made millionaires. That made crypto millionaires. People like you and me that grab the lunch bucket and come into these markets every single day looking to hack out some cash. I still think that way about trading. I'm still saying, okay, how am I going to beat these guys out of, instead of 9 points, it's 30 points. But how am I going to beat them out of this money today? People like us, retail traders, got rich on that run up. So I always go back to it. They say, Shane, is the crypto bull market over? And I say, no, probably not. But the returns from 15,000 to 125,000, yeah, it was a nice 8x, 9x. It wasn't 15. It wasn't buying in at 3,000 and going all the way to 69. It was buying in at 15,000, which kept a lot of retail traders out of it. 3,000, at one time, that was a stimulus check. Somebody who got that from the government said, okay, I'm going to buy a Bitcoin. Well, it turned out to be a pretty good move. 5-year move, made 125 grand on it. That's a pretty good deal. In any case, right there, that all-time high, we pulled back 78%, was right there at 17,000. That essentially is where we were calling the bottom. The YouTube videos on Forex Signals TV. Go back and Google Bitcoin. Is the Bitcoin bottom in, I believe was the name of it. First YouTube video I ever made, and then it went right there. That was the bottom of this thing. So when we look at our macro waves, they're very important. 84 is huge for Bitcoin. If 84 is taken out, you betcha we're going low. We're going very low. It hasn't been taken out. We're holding on at 91. I'm watching 100 closely. If we get reestablished above 100, you're back in business and you're back in a bull market. So I wanted to start off with crypto and Ethereum and Bitcoin. I thought it was really important. Those are movers and shakers. And remember, Black Friday over at Switch Markets is rocking and rolling still for another 3 days, 5 hours, 45 minutes, and 1 second. You can get in on a lot of the deals that they have over there. If you're a brand new trader, you want to get on over there, they've got something real special for you. If you want to open an account and fund, I believe they're matching dollars, actually in dollars this time, not necessarily just some sort of credit bonus. So keep an eye on that. If you're an existing customer, they can also do some things for you. Go on over, check in with support team, see what they got. Say Shane sent you Black Friday. What's that all about? If nothing else, you're going to get a big lineup of brand new tools that we're dropping. I'm working on some different codes and things that maybe we'll be giving away early in the new year. Not necessarily sure, But there's a lot of value over there. So if you're a trader, if you're an existing client, be sure to check in. And also, if you're a client that's maybe brand new to the markets, go ahead and check out Switch as well. Let's see. Tina Jing, I bought some silver again at 57,513. You said it can go up to 59 soon. Yeah, I mean, your trade location to the long is not the best, but if you bought at 57.50, you're already in the green. So I definitely want to buy. We'll go ahead and take a look at that in just a second. Good trend following play, though. I really don't have a problem with it. The biggest thing I've got my eyes on is 60. I think we're going to see some sellers at 60. We'll go over silver here in just a second. Let me see. Dead Sea Scrolls. Sup, Shane? You the man. I don't know if I'm the man. How can I be the man if you're the man? That's what I always say. No, you guys are, I think a lot of you are doing very well. And if nothing else, getting your feet wet in the markets. I get to talk to traders from all over the world, and it's one of the most fun things that we can do, really, in this type of environment. You know, you just go online from your office and get to talk to people from all over the world of all experience types, and it's been a lot of fun. It's been a great experience for me the last 4 years. It's helped me as a trader just to see, exactly, where I'd been, where I'd come from, and where I'd been, and I see a lot of you are going through the same things. The trailing stops. Remember about 2 months ago, about 6 weeks ago, all the questions were about trailing stops because we were getting these big moves. We had a couple of orb moves that were just huge, and the idea was like, man, should I use a trailing stop? And I was like, I was there. I remember what it was like to be in on a big mover and shaker and to be sitting on the sidelines as it went through the moon. I go, man, I need to use a trailing stop. I was there. I got those messages where, I blew my account out. I blew another account out. And I said, I was there. I've been there. I know what it is. So when I get to an opportunity to interact with you guys, whether it's a live message, live chat, written message, private message, even sometimes one-on-one meetings, those types of things they're very valuable. They're great. So I definitely want to say a big thank you for all the input that I've got over the years. Good, bad questions, great questions, simple questions, hard questions. Some folks weigh in on YouTube and they say this 920, it's okay. You need to look at it with stochastics, or you need to look at it with a VWAP. And I go, that's pretty good. I had a gentleman say, hey, listen, the 920 is pretty good. Use it with a parabolic curve. And I said, I never even thought of that. I go, a parabolic curve with a 920. And then I started thinking about market structure. And I said, yeah, that's interesting. My point is this: your creativity is your number one asset. Remember that if you want to be a trader, it's not like everything else. It's not like it's just not a regular job. You don't show up and make, there's a lot of folks that work on assembly lines that you don't make the same thing every single day. You're going to have to be able to tweak things, overcome obstacles, make things work, troubleshoot them. So if you're an assembly line worker, essentially your job is it's not simple. I'm not saying it's simple, but it's repetitive. You get into a rhythm, you know exactly how to do it. Boom, 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 boom. You got a process in place. As a trader, you need to have a process, but your end product isn't going to look the same every single time. So instead of thinking of yourself as a worker in the factory, you probably need to think about yourself as someone who's going to fix any problems that come up in the factory. You're the ultimate manager. You're the ultimate entrepreneur and the ultimate manager. And that's what it is. And unfortunately, for a lot of people, they believe that managers have to manage a ton of people. You need to manage yourself. Manage your emotions. Manage the angst, manage the cortisol, manage the dopamine, manage the highs and the lows of winning and losing, manage the money. Got a big responsibility. It's a big job. A lot of people don't think it's important. I think it's very important. I think that providing liquidity to the markets is an essential function of capitalism. Now, I'm not talking about it from an institutional level. You can't play with the institutions. They got too much money. But you got a little bit, and you got some smarts, and you can make this thing a go. And if you're good at trading, you can always find money to trade. There's a million prop firms out there, a lot of them good, a lot of them bad. They'll all fund you if you can make money. So I want to start off and really talk about that because we're into December. We're getting towards the end of the new year. Or the end of the new year. We're getting towards the end of the year, ready for the new year. And this is the time of year people reflect. They look at the last 12 months or 11 months of trading and go, man, how has it gone? Sit down and be honest with yourself this year. I am. I'm brutally honest with myself. Let me see, Tina, I saw your short this morning, the algo. Yeah, the algo is pretty good stuff. I got a lot of interest in the video. The views over on Switch Markets. Go ahead and check the video out if you'd like. The views are really small. I mean, we're not getting thousands and thousands, but that's not really what those videos are for. Those are for people that really want to get in and take a look at some of the service suite and learn about trading. We're looking at some stuff in the gold silver ratio right now. I'm working on some stuff right now. Also how to trade the FOMC minutes. Those videos are all going to be coming out. How to trade the S&P 500. All these things are going to be dropping, and you guys are more than welcome to watch them, get what you can out of them. If you have questions, ask, that's for sure. But I'm glad you enjoyed the short. The algo stuff is cutting edge. It's AI, and that's what the future is. Everybody wants a piece of AI. AI can really help you in trading. Check the videos out, and you'll sort of see where we're going with it. All right, everybody, let's go ahead and get into this gold-silver action. Gold-silver, this is sort of what I've been working on. It's the gold-silver ratio. It's an interesting type of a concept. The gold-silver ratio, we're going to sort of dovetail this into the gold and silver markets, but what the gold-silver ratio is it's the ratio of the price of gold to silver, and it's an indicator that really gives you an idea of the relative risk-averse or risk appetite of the market. So when you see a big gold-silver ratio like COVID-19, 126 all-time high, it was not necessarily a catastrophe from a gold bug's perspective. You made a fortune if you're holding gold going into COVID. But this ratio is the difference between the price of the gold and the price of silver. So what you do is you take the price of gold, divide it by the price of silver, and all of a sudden you're going to get your gold-silver ratio. Typically when it's high, that means there's some sort of crisis. When it's sort of within a mean area, mean value, it means the market is just ebbing and flowing. You can see a lot of really nice waves between the 25-year typical range, between 40 and 80. I think that's a fair assessment of where the typical range is. 20th century, what that taught you about the gold market was key events move the markets. That's it. Great Depression, 1970s when the U.S. got off the gold standard, things like that, wars. Definitely moved gold around because that's been the store of value for mankind really for 10,000 years. Gold-silver ratio is important because it tells us how much angst is in the market. It also gives us trading opportunities. So you can take a good look at this right here. For this year, your top of your gold-silver ratio was 107. That was a high level. That was during that April tariff crash. So since then, we've been coming down. And the reason why we've been coming down, even though gold is making all-time highs, is because silver's making a run at it. Now, right now, your gold-silver ratio is down to 72. It was at 106, 107. Now it's down to 72. And what does that mean? It means silver is going up faster than gold is. Now, a lot of that was to be expected. We were talking about silver last spring as being a potential sleeper for this year. It's been a fantastic trade this year. No question about it. Absolutely no question about it. The key for this breakout is that silver wasn't making all-time highs like gold was this entire year. Gold was at all-time high levels. Well, what happens when you make all-time high levels? You typically make them slower and slower and slower. Now, silver, on the other hand, had a fantastic breakout zone. Let's go to our monthly chart, and you'll see. And it was right around that 40 range. So we knew a couple of things for sure and certain. We knew that 48 area, somewhere in that zone, we knew once that broke that we had a tremendous upside on our hands. We knew that was the breakout. Now, gold didn't have that. Once we took $2,000 an ounce out in gold, we started moving up, but it was very incremental. And you remember all summer long we were consolidated around 3,500. Nothing happened, right? But then we broke, and now we're talking 4,500. Okay, that's great. Key level 60 here now for silver. So this move right in here over the last several months has been faster than what has happened in gold, and that's why you see that gold-silver ratio coming in. That's a pretty dramatic fall from 107 down to about 72. That's about 35, right? 35%, somewhere in there. That's tremendous. And the reason why is silver's rising faster than gold. Now, does this continue? That was sort of the question from Tina over in the live chat there. Shane, I bought, what did you buy? 57 513s. We're going to look at the short time frames here in a second. Could it go up to 59? Yeah. Is it going to? I genuinely don't know. I do know what's likely to happen up here at 60, though. Now, our high is dug in right there at about 58.85. So if you're looking at 59s, you'd probably be looking, if the 59's your profit target, that's great. Theoretically, if you do hit 59s, you're probably going to look at 59.25 and 59.5. I expect sellers to get involved right in front of 60. So I'm looking sort of at 58.750, 58.75-ish as being a potential shorting zone. 58.94, something like that would be absolutely beautiful. Or 59 right in front of 60, 59.50, 59.75, 59.94 would be beautiful. We could scalp that to the short in front of 60 and just get in on that two-way action from the key level. That's a tried and true trade. That's one that's really difficult to lose. About the only way you lose that one is if you get greedy. In any case, that's going to be a trade idea coming our way probably relatively soon. And just to give you sort of a sneak preview, it's going to look something like this. I mean, realistically, we're going to have sort of a stop loss probably right here, right down maybe 62.50. That's a big trade, though. You got to dial your leverage down. If you wanted to be very conservative, maybe 60.25, maybe something like that. 60.50 would be a stop loss. And then your profit target's going to be dug in, somewhere right there, right around 59, something like that, where you're looking to get, maybe a 1 to 2, something like that, depending on your ratio. So the idea there is relatively straightforward. What would be your price? Your entry price is going to be, I wouldn't go 59.32. It'd be somewhere. I mean, a great trade is 94. An acceptable trade, 75, something like that. So you'd be doing something like that, and that's essentially your trade. You'll notice the way that thing's structured. You're just looking for a two-way rub. You're looking for buyers and sellers to have friction and price to sort of go up and come down and go up and come down. And as long as it comes down a little bit, you're okay. There's only a couple ways that I would pull this trade from the radar. And one of them is if you get compression right in front of that 60 level for an extended period of time. And if that starts to develop, I'll tell you exactly why and say, maybe we have a pennant or something. We better wait. That's relatively straightforward, though. That's just pattern analysis. Now, as far as your 4-hour chart goes, if the buy signal, the buy entry was somewhere right around 57.50, it's not bad. Not bad at all. You can see exactly what's happening here. You had that massive run-up, really an explosion to the top side, and then we sort of pulled back. So our Fibonacci's, let's have a look. Where are you going to go begin with your Fibonacci's? I like the most current spike to spike, and I believe that's going to be it, and that's, just about perfect. I mean, you say, Shane, what are you just doing this in hindsight? I said, well, the idea here is we want the move. So that doji right there sort of is the swing low. Do you see any other spike lows? I guess you could go right up there to this spike low. Very small, something like that. Doesn't matter. 38% is right in the neighborhood either way. So bullish. I like the long side of this market. If I was going to make mistakes in this market, I would make them to the long. Does the price go up right now? I don't know. Timing's everything, right? If I wanted to micromanage this trade and be hyper aggressive with my trade management, I don't like that. That gives you a pretty good idea of the market structure you're going to need to hold true if you're going to go up there and hit your 59 target. So something like that, 57.75-ish. That's a pretty good zone. I would watch that closely, 57.32. If you start getting down into here, you could be in a little bit of trouble. So you definitely want to be aware of what's going on. And we just got to wait and see. So, yeah, let's see. Great. Adjust my take profit to 58.95. Well, I mean, you could. That's certainly a way to go. So from right here, you're going to need 58.95, something like that. It's completely doable. You're just going to have to take out that spike high, which means you're going to have to make another all-time high. I mean, is it worth it to kick it off right there? Maybe you move it up in here somewhere. I don't know. That's all completely your call. Can't tell you how to manage these things, that's for sure. Gold, I know a lot of folks like to see it. Gold, we go from all those lines on the chart and all that advanced technical analysis and Fibonacci and microwaves and all that jazz to a simple trend line. A simple trend line. This was one that I put out last week. You can see it's just a two-toucher. Well, there's one touch, there's two touch, and then we rally, and then we broke through that trend line. Now, remember, the third touch is everything when it comes to trend lines. You either get this thing to act as topside resistance or a potential reversal. In my view, this is a reversal trade now. You probably want to be to the long side of this. Now, how do you do that? I'd say, well, there's a couple of ways. I mean, number one, you could be looking maybe to enter right now. Not the best trade entry. Can we do any better than that? And I would say, yeah, spike low right there. Go up to this week's upper extreme. And you'll notice that intersection of the 38% level is right there on that trend line, which is right around, 41.25. I like it. So if we get a pullback down to that zone, I would be relatively confident that you're going to get paid off, at least on a scalp type of a trade for a few bucks. This is not a bad zone, though. So if I was breaking down the gold market, I wouldn't make it any more difficult than this. This would be it. And I know that if I get that trade this week, I'm going to be in pretty good shape, and it's only, $60 away, $65 away. I'd be looking to buy probably 41.26s, something like that. I would want to be aggressive because that's a nice level. That is a really nice level. So, creativity is always going to be your best friend. It's always your number one asset. Always think, use your heads, be creative. Fibonacci retracement lines up perfectly with our trend line. Yeah, I like it. I like it a lot. We could even go to shorter time frames and probably get another Fibonacci level to line up there. We don't need to. That's enough for me. I don't need any more to go on. That's pretty good, though. That's not a bad trade. All right, week 49. What do we got here? I have a question in the live chat, too, of the How to Trade Trading Room from Bobby Bob. I'll answer your question in just a second, Bobby. My apologies. I got a little bit behind. Hi, Shane. What's your take on the Great Britain Pound USD? Is it the right time to sell on the 920 EMA 4-hour? Yeah, we'll go ahead and look at the Great Britain Pound and the 920 EMA. I want to look at that dollar yen as well. We've got something developing there that could be pretty tasty, sort of a rebound off of that news. And right now I'm watching the market sort of fade away. We were up big bullish earlier, and now we're giving back all the gains. What's going on with crypto? I'm curious. Crypto still holding the gains off the news. 92, crypto driving higher now. Very, very good. Ethereum up to 33,025. Bitcoin up to about 92,000. There's some good stuff here. A lot developing. Gold taking it on the nose. The NASDAQ's giving back a lot of its gains. Interesting stuff. Interesting times. All right, let's go ahead. Week 49. What did we have for today? Not much. EU CPI, JOLTS jobs numbers. I'm going to go ahead and look at those in just a second. I didn't even pull up the JOLTS jobs figures. As far as Wednesday, ADP non-farm employment, be ready for the ADP numbers in the morning. Those could definitely drive participation. Tomorrow, Switch Markets live trading webinar. It's going to be exclusive. I'm talking about how to trade commodities. We're going to be talking gold, silver, crude oil, and we'll look at some ags as well, some agricultural commodities, CFD products, and futures. Thursday is going to be jobless claims, weekly jobless claims. We're interested. We're typically never interested in those. We're interested now because the jobs data sort of sparse, few and far between. And then Friday is going to be the PCE price index. That's going to be probably your big mover and shaker this week. And that's the Fed's go-to barometer for inflation. Next week, 10th of December, mark the calendar. It's going to be FOMC Live. That PC price index is definitely a market mover. We will not be live streaming on Friday, but be out of the office on Fridays for the rest of the year. But definitely take a look at it. That's going to be your big event for your Friday session. All right. As far as what we had in news today, EU CPI was the big thing. Core CPI came in as expected. These are preliminary statistics. We've seen several sets of these now, but November, 2.2%. You rose slightly. That suggests that inflation maybe is ticking higher. CPI month over month, though, is down. So when we start to say, okay, Shane, it's up yearly, but it's down monthly, what does that mean? Who knows? It means seasonally adjusted, essentially. So even though you came down in November, it wasn't enough to offset maybe the gains from earlier in the year, maybe the situation from last year at this time. Don't get caught up in the minutia. The bottom line is it was sort of a positive reading, but those numbers don't mean a whole heck of a lot right now. Everybody's waiting on the Fed. CPI, is inflation as bad in the Eurozone as it is in Japan? Bank of Japan doesn't think so. Bank of Japan thinks that potentially their inflationary situation is the worst. We don't know. We just got to wait and see. And I do apologize to all those watching on the How to Trade com live chat. Looks like it's off. My apologies. If you have any questions at all, and if you're typing in the live chat and you're not getting any responses from me, it means it's not showing up. So definitely reach out to me over at How to Trade via private message. I'll get back to you. Okay. So what we have to do here is we got to take a look at a couple of pairs here. Let's start with let's start with the dollar yen. The dollar yen was the big one. I wanted to really bring this trade up because this could be a trade idea maybe for tomorrow. I've got to wait for this crossover to develop. This is the 920 EMA crossover. This is our coded version, and we've got the dollar yen. We had that big news event to open up the trading week and open up December, and then what did you have right here? You got a rebound going. A couple of things that I would really want to point out here and what the trade could potentially look like. You're in oversold territory down here on your RSI. That means that, okay, we're looking to buy the market with our crossover. 4-hour chart, it's not that important to me, but it does give me a pretty good area to potentially get out of the market or set my stop loss. Right now we're working on a crossover. Now, if the red one, the 9 EMA, crosses over the blue one, the 20 EMA, then we're going to rock to the top side and potentially look to make a few dollars on the bull. We haven't got the signal yet. You probably won't get it later today, maybe during the Tokyo session or right after the Tokyo Open. So definitely want to check that out. That's potentially a good-looking trade to the long side. I'm going to be watching this closely, and then right there is going to be your stop loss right beneath that swing low. Swing lows down there at about 154.66. Something like that, 154.51. Not a bad location there. You got to get the crossover first before you can get involved. Now to Bobby Bob's question, wants to see Great Britain Pound USD on the 4-hour 920. Number one, Bobby, great time frame. 4-hour on the Forex is really what I promote that a lot. I promote that one a lot because it gives you a great sample set. There's enough information in the price bars. You can avoid a lot of the chop using a 4-hour chart. And the beauty of it on a Forex market, a truly 24-hour market, the beauty of it is the ranges typically aren't that big, and you can work with them. And that's what this is all about, making trading affordable and giving you a legitimate chance to profit. So something like this, Great Britain pound US dollar 4-hour, you've read it absolutely right, Bobby. So there would be sort of your trade. So if you were looking for your short trade, you've already got it. Right there, boom, there's your short. And your stop loss could be a number of places. You could put it above the trigger bar. I think that's way too tight myself. I really do. Because remember, I mean, you can scalp with the 920, but you pretty much want to take a position. So if you're doing that, 132.82, that's just about 70 pips risk, something like that. And then you're going to want to at least get a 1-to-1, something like this would probably be the trade in question. Maybe you want to go bigger. If so, that's going to be a significant move. You're looking for about a 200 pip move. Is there anything in the markets that's going to move this thing 200 pips this week? Maybe PCE, maybe. More than likely, you're going to be in this trade. I would just brace myself and be ready for it. Be ready to be in this trade a week. If you're going to look for a 1.5 or a 2-to-1 payoff, that's essentially what you're going to do. So be careful with this entry. I like the trade. More than likely, you probably could get away with playing real tight like this. Stop loss, let's see, the higher your trigger bar here, your signal bar is going to be 132.13. So, maybe 132, 25, maybe 27, something like that. That gives you a legitimate chance, gives you the quarter handle, and you could at least do something like this, maybe bring this up. If you wanted to shoot for a 1.5-to-1, now we're really only looking for a 50-pip move, something in that vicinity. That's not bad. It's not bad at all. So you could definitely do something there and maybe make a run at it. Something to think about there if you guys are trading the Great Britain pound USD. Good observation, though, Bobby. You saw that signal. I hadn't looked at it yet today. That was a pretty good one. Watching the dollar yen to the top side, watching this Great Britain pound USD to the downside. And what do both of those trades mean? It means that the US dollar has to rally. That's what it means. All right, everybody. We've sort of covered a lot of ground here. U.S. oil still hanging on. I mean, the big news, clearly is Venezuela. Everybody's waiting. Maduro faces his ultimate fight as Trump threatens military action. That was 3 hours ago, threatening to attack a country with more oil than Iraq. Yeah, so Venezuela's got a ton of oil. Pope Leo doesn't want Trump to attack. I believe Russia gave the attack or gave the U.S. the green light, which was interesting because they sort of had been allied with Venezuela. One of those things that you say, oh, okay. I mean, I guess if that's what's going to happen, it's what's going to happen. A lot in the news, though. A lot in the news that that all sort of point towards military incursion. Now, just because we think or we read stories and think that we're going to get that type of incursion doesn't mean that we will. We don't know what's going to happen. And if we don't know what's going to happen, it's stupid for us to pick a position and try to guess. If you find yourself guessing, that means you're gambling. Guessing equals gambling. I like to gamble, and if you're going to guess, that's fine. And if you're right, that's great. Just make sure of one thing. Make sure that you keep your risk under control, because if your guess goes wrong, don't let it blow your account out, and don't let it impact your trading. So this is the real idea here. I mean, what's really going to happen? This is poly market. This is a huge betting market here in the United States. You can pretty much bet on anything. They say it's a prognostication or prediction market. Whatever a prediction market is, essentially, you're just gambling. But what we're talking about here is something big going to happen in Venezuela by the end of the year? This market's up big. U.S. Venezuela military engagement by December 31st is at 45%. Maduro's out. That's the leader of Venezuela. Out by December 30th or out by March 31st. Right now, they believe that he's going to be in power. Maduro basically said he's not leaving. He's going to dig in and fight. I don't know how. We're going to find out. Military engagement, you can see they sort of have the exact day. Pretty much, no engagement in 2025, 54%. That means that there's a 46% chance that you're going to get one between now and the end of the year. Trump already talked to Maduro, so that market's gone. They had a phone call. So what U.S. forces in Venezuela by December 31st? Only 11% chance. That means that ground invasion's probably off the board. For me, that would be the big catalyst, the primary catalyst for what would drive crude oil price is much higher. U.S. will invade Venezuela. Not much of a chance of that at all as far as a full-scale invasion. But we just don't know. So if we're looking at U.S. oil, daily chart, I wouldn't use a 4-hour chart to trade U.S. oil just because the volumes typically all come on the board for the U.S. session. Be very careful with that. Right here, though, you can see when we're looking at that 920. Is there anything we could really hang our hat on? Not really. We had that sell last, on the 30th of September, so a couple months back on the daily that's worked very well. It definitely told us when to get short, but, I mean, it was a tough trade to take. What are we looking for now? If you were to get a crossover, I wouldn't trade it. No way. Now, it might develop, and if it develops, maybe you get in ahead of that Venezuela incursion, and you get a couple dollars pop off of it. If that's the case, then it may not be a bad trade. For me, I don't really want to be holding longs here. If they come out and announce a peace deal, or if Maduro steps down and there is no nothing, the oil prices are going to crash. That's one of the market drivers that's keeping crude oil up there, just because any sort of incursion down there, at least initially, is going to bring some bidders to the market. Now, if it doesn't last, and if it's sort of like the early 90s Iraq war, the first Gulf War, which a lot of you probably weren't born for, don't even remember. I remembered. I was just a little kid, but I remember how fast it was over. And then I heard the stories from my mentor, my uncle, about the positions they were holding in oil, anticipating a big war and a big conflict, and it didn't develop and the price of crude oil crashed. That same thing can happen here. If this is as easy as Maduro leaving and then all systems are go, you're going to see oil price crash. If the U.S. just hits them with a few airstrikes, you're going to see probably a pump, I'd say probably a $5 bump, but it may dissipate in as fast as 24 hours. Be ready for volatility. These are tense times when it comes to crude oil. You do not want to get stuck on the wrong side of this market given the geopolitical uncertainty. That's a fact. In any case, if you get a crossover here and you want to buy it, go ahead. One last thing I would point out on the RSI, though, that thing's right around 50. I mean, the market just isn't going much of anywhere. So I would be very, very cautious. As far as what we can do with Fibonacci's, not much there. I mean, really not a whole lot there when it comes to, nice little pop off of that 38% in silver. When it comes to Fibonacci levels in trading U.S. oil right now, I don't see anything that really makes me happy. Not much at all. Yearly lows, I still believe those are going to come into play in the next 3 weeks. We will find out if I'm right or not. And if I'm not, don't worry about it. Then we're going to sell beneath 55 probably in January, catch a nice washout. 60.50 though, 60.49. You've got a 13-period EMA up there, a 13-week EMA at 60.59, 60.49. That's pretty ripe selling up there. As far as what could we do right this minute, I'm on the sidelines. It's tough to hold a position given that geopolitical uncertainty. That's a fact. Let me see. Eyes hazy. Did you achieve your yearly profit target? Nope, I did not. I did not. Sorry. Tip of the cap to the markets. They didn't beat me, but no, I didn't. There's no private jet eyes. There's no new Ferrari. No, I look at this last year was a positive year, no question about it. Very, very trying. I watched a lot of people get wiped out. And it all has to do with the way that the information is disseminated now, the change in direction from the administration on a seemingly daily basis. There is a lot to contend with if you're an active trader. You've got to be watching the news, and you've got to sort of be dialed in. There's a press conference today about Venezuela, I believe at 1 o'clock Central, which is in about 15 minutes. So we've got to be very careful with what we do. That's brought a new dynamic to the game. 2024 was actually a very good year just because there not much happened. Over the summertime, you could trade rotation in the indices and do very well. That was great. This year has been much more challenging. So to answer your question, Eyes, did I achieve my profit target? Nope. But my profit target's probably a little different than yours. That's okay. Nothing wrong with that. Might be smaller or larger. Who knows? Just depends. Let me see. Bobby Bob, thank you, Coach. I really love the 920 EMA. It works for me. That's great. Remember the big things, risk management. With the 920, knowing what to trade and when to trade is pretty much the name of the game. If you wanted to trade that U.S. oil daily, 920, I couldn't really blame you for doing it. Just because if you get a bid signal and then you get an attack, you're probably going to get a big run up. And that crossover may actually preempt the attack. And if it does, you're in great position to win. I just see it as being a high-risk trade because of the uncertainty. That's all. All right, everybody, I'm going to go ahead and sign off for now. We covered a lot today. Tomorrow, we're back with the Switch Markets live trading webinar, How to Trade Commodities. Please join me if you'd like to learn how to trade commodities. I'm going to talk a little bit about futures, the spot markets as well. We're going to look at some Forex pairs that relate to commodities. We're going to look at maybe some commodity dollars. And, of course, I'll take any questions that you may have. We'll cover any big news events. If we start seeing these strikes, then we'll be talking a lot about crude oil, probably trading it live and doing the whole 9 yards. All right, everybody, have a fantastic trading day. Trade the action well, and we'll talk soon. See ya.